FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, what we're going to do is I want to break down for you what makes a good continuation trade versus a bad continuation trade. So when we trade the US session, we're really only looking for really two setups that happened. Either a reversal off the high of the day or a continuation trade that pretty much continues what happened throughout London and sometimes what happened throughout Asia. All right. So really, those are the two main setups that I look for personally on a US session. If I don't get either one of those two setups, I don't trade. So let me show you an example of what a good continuation trade looks like versus what a bad continuation trade looks like that I wouldn't take. So that way you can kind of defer the difference from them. And they're very characteristics in each of them, so you know what you're looking for. All right. So let's go ahead and while we're on Euro USD, these happened today actually. So if we look at Euro USD, we can clearly see that we had a full day of rise on Thursday, right? Now, if you look, when coming into the US session, we also, the move continued on, but we didn't have a real big pullback at all. You notice that, right? The pullback itself really was only maybe 9 or 10 pips. So you have to ask yourself, if in this situation, if you're back here, at the beginning of the start of the box here around 8 o'clock, and you're only about 9 pips out from what you perceive at that moment in time is the high of the day, it's kind of hard to look for continuation trades because you really want a continuation trade to have a deeper retracement. And a deeper retracement really would mean more of a 25, 30, 35 pip or more retracement. Depending on the pair that you're looking at, if you look at some pairs like NZD, AUD pairs, those retracements could be up to 50, 60 pips easily. So the first thing that we want to have, obviously, is we got to have an actual move, a strong move that happens during London, which is what we did. We ended up getting a type 3 actually here in London. So we went straight up, and then as you see, we continue to go higher. The problem is that we didn't have an actual deep retracement. And typically the retracement I'm talking about is like going to the 50 EMA and then pushing back up. So if we take a look at something like Euro CAD, look what happened on Euro CAD. Euro CAD went from the low of London back up about 37 pips. And so if you compare that, right, if you're at the beginning of the US session, you're already 30 pips out. So you're too far from the low of the day, or the perceived low of the day at that time, to think about trading a reversal trade. So the only other option that you would have would be to trade a continuation trade that basically continues the move. So it would be essentially like this, right? Same thing for if you go to Euro USD, you'd be basically trying to do this, okay? The problem is that on this particular continuation trade, the trade itself really did not produce a good setup because you didn't have a deep pullback like you traditionally want. Okay, and this is something that you want. This is the characteristics of that particular type of setup. So if you look at other pairs on yesterday as well, like Euro NZD, same thing. Look at the pullback from the low of London all the way back up 51 pips. You ended up getting a star pattern, right, that pins to the 50 EMA with a huge pullback, right? So the setup would look like this. You'd get in on the pullback, and there's your 3.5 to 1 risk to reward ratio on that trade. If you look at Euro AUD, Euro AUD did a full pullback. I mean, you could see clearly 78 pips. We pulled back all the way to the high of the initial high of the day, which is back in Asia. And we see we got a railroad track here followed by a nice pullback. That would have been your entry. So the entry would have been on the pullback here, and then of course you would have gotten another way over 3+ to 1 risk to reward ratio. So on this particular trade setup here on Euro USD, you really didn't have that deep pullback to get a good setup. Granted, you did get a huge pullback here, by the way, on this candle. So technically that could have been an entry, right? Something like this. That could have been an entry, and you could have easily still gotten way over 2.5 to 1. The problem is that the setup rules that I put in place for myself are not there, which I want to see a deep pullback. Ideally, a pullback to the 50 at least, or a pullback of 35, 40 pips or so, depending on the pair itself that I'm trading. Okay, so you could see a huge difference between what I would want as a good pullback and what I would not want as a pullback itself. Okay, so just a quick video so you can see the differences essentially between the different pullbacks that you would get, and what I think is a good pullback for a good trade setup versus a not so good pullback that I would probably stay away from, just because it's not providing the type of setup that I'm looking for and that I'm used to seeing. Same thing on pound USD. If we look at that, it continued to go up and we didn't have a huge pullback. You could see that the pullback that we had was, only 20 pips. And so that didn't provide also a good, good entry either. So the pullback that we would have wanted would have needed to be, let's say, a pullback down again to the 50 and then to go, and that would be your trade setup there that you could take. But again, we didn't get that kind of a trade setup, so no trade on this particular pair like this. So guys, I hope that you learned something in this quick video that I just wanted to share with you guys. What was the difference between a good pullback and a bad pullback for a continuation trade that happens in the New York session? Remember that we're not interested in trading absolutely every possible setup that appears, or even trading every single day that the market is open. What we're looking for is the right trade setups that happened maybe 2 or 3 times, 4 times a week throughout a spread of maybe 5 pairs that you should focus on, and take those pairs to be a consistent, profitable trader. Because you have to remember that if you're trying to do this for a living, one trade doesn't determine whether you get rich or not, whether you make money for the whole year or not. Okay, so don't get stuck in the fear of missing out on a trade, because believe me, tomorrow's another trading day, next week is another trading week, next month is a trading month, is another trading month. So don't focus too much on, oh my God, I need to trade today. Look for the right setups, do the back testing that you need so you can understand what the setups look like, because these setups, when you look at them, they look very similar and they repeat themselves over and over and over again. They just don't repeat every day. But these patterns do repeat over and over and over again. So when you see the pattern, you can trade it as long as you know what the parameters are, and that's where the back testing comes in. All right, guys, thank you so much. Hope you enjoyed the video. Hope it brought a lot of value to you guys. and have a great rest of your night.